All right, perfect. Let's get it started. Okay, perfect. Thank you guys for being here, especially on time. Um, this is one of the last few weeks of the consulting development program, and I'm going to talk about our case competition that's going on. I've been writing that for the last few days, so that's going to be announced soon. If you guys didn't get my email yesterday, which I know you guys did, but if you didn't, let me know. Reach out to me. I'm trying to set up the teams right now for the case competition. And I need you guys to reply to that email just to confirm that you could potentially make the event. As of right now, it's going to be scheduled for Friday the 18th. The time is to be determined, but it's probably going to start somewhere after around 3 to 4 o'clock. And we'll probably only have about 3 to 4 teams presenting. We'll have the judges or the consultants actually give you the results that day. And we'll walk away with a winner, take a picture for our cohort too, and it'll be a good time. But before we get started, today we're going to be focusing on mergers and acquisition cases. And if you don't know what M&A is, when I say M&A, I mean mergers and acquisitions. It's the idea of buying other businesses or potentially selling your business, and helping in that whole process. But one of the big things I want to share today is a specific consulting firm who really focuses on this practice. So, as you can see right here, Oliver Wyman, and wait up. Let me share my screen, make sure you guys can see that. You guys see my screen. Somebody say yeah,
Yeah,
please.
we can see it.
All right, perfect. Oliver Wyman. Oliver Wyman is the first to kick off the recruiting season. So what this whole program was for you guys to get ready to recruit. These cases, these frameworks that you guys have been learning over the last few weeks are all to be utilized for potentially looking for an internship or looking for a full-time job. In terms of recruiting, like I said, I mentioned probably at the beginning of the consulting development program. For consulting, it's a little bit earlier. In terms of recruiting, they pretty much start to recruit pretty early, about a year out. Sometimes you'll see accounting firms start to recruit about a year and a half out, 2 years out. But Oliver Wyman is the first firm every year to release an internship program that is relevant for 2026 opportunities. So when you're thinking MBB, McKinsey Bain, BCG, and you're thinking about tier two consulting firms and maybe Big Four after that, Oliver Wyman is the first one to release it. So they have released their internships, they released their full-time positions. This means it's the start of the recruiting season. So as you guys start thinking about the next few months, and if you're actually thinking, if you're a sophomore that's trying to recruit into consulting, if you're a graduate student that's trying to recruit into consulting, or even maybe even PhD student who's trying to recruit into consulting, right now they've kicked off their undergraduate recruiting, right? This means it's the start of the recruiting season for us as undergrads. In terms of PhDs and masters, it might be a little bit different when they start their timeline. Um, but in terms of 2026 recruiting, this is it. So here, if you're trying to start, if you're a junior right now, trying to apply for a full-time job in 2026, that's probably going to start around September 26th, entry-level consultant. And if you're looking for a summer internship in 2026, same thing here. In terms of pay, I wanted to bring that up too. So as you can see here, Oliver Wyman is one of the top payers in terms of this is how much you'll make in terms of the internship. And then for full-time, I think it's right here. We go Oliver Wyman right here. Um, Bring this down. Oliver Wyman. So you can see right here, 110 base. I mean, this is a top paying firm. This is one of the top consulting firms. But what I wanted to show you guys here is I don't want you guys to see this, see me showing you this posting and you guys just go and apply after this. I've taught you guys the idea of networking, learning about the firm, almost preparing yourself pre-professionally, and then from there also casing. But what I don't want you guys to do is just go apply to this after this meeting ends. What I want you to do is find people at Oliver Wyman that work there, try to network, try to build your name. And if you can't, and if you're coming close to the deadline, I think for the internships, it's somewhere in May, apply. But what I would try to do if I were you is some type of networking, some type of trying to get your name out there and trying to build some type of credibility within the firm. The way you could do that, that's why I'm kind of showing you this. So I'm recruiting right now for Oliver Wyman full-time position. I've been networking with a couple people within the firm. and I was able to get a call with the recruiter. So this is the recruiter for the Chicago office, and I'm showing you this to you guys so that you guys could leverage this. So potentially, if you guys are trying to recruit in the future, this is the recruiter for Oliver Wyman Chicago office. So I would just want you guys to be aware of this. Don't tell her I I reached out to you, or don't tell her I sent you just because I'm still recruiting with them. I'm literally going to meet with her next week, and hopefully I could build good face. But I want you guys to at least be aware of the scope, and who are the people that you could reach out to. So the recruiting season has kicked off for 2026. I hope you guys are prepared. And if not, today we're going to do another case. We're going to go over some of the frameworks that we've talked about in the past, and then apply them more in today's case. So if there's any questions there, just drop them in the chat. But I want you guys to be aware that the recruiting season has started, and it's kind of the reason that we started this, and that's kind of the reason you guys are, I would assume, here, or at least to learn more about consulting. So at least you could learn that the recruiting season has started. So let me share my actual screen now, and let me start presenting this. So I could get to the actual case because that's probably what you guys want to do. Um, Let me share my screen. I think it's screen 3. Perfect. Actually, it's the wrong screen. Display settings. Ooh, that's not what I want. Just give me 1 second. Ooh, what did I do here? Give me 1 second here. Let me just unshare my screen, and I'll reshare it. So I want this there. And from beginning. Perfect. What website did I use to find those salaries? Yeah, so that's management consultant. I'll just drop it right here, actually. And you could look at all the firms. They have their internship pay. This is probably like the #1 website when it comes to like recruiting and like looking for stuff. If you're just trying to get some info about firms and stuff like that. Okay, so let me stop tweaking here and actually share my screen. Wrong screen, but I need to share screen 1, share PowerPoint. Let me open that, and then from beginning. Perfect. Can you guys see my screen now? Sorry about that.
Yes.
Perfect. Thank you. You're tweaking. Okay. Awesome. Let's do it. So today we're going to be learning about M&A cases. Like I said earlier, if you don't know what M&A is, the whole idea or what it stands for is mergers and acquisitions. So some of the common consulting case themes, and I'm going to take us back all the way to the start. We've talked about profitability. We've talked about market entry and talked about market sizing. So when you guys are actually implementing this today into our case, you guys should be aware or at least utilize the frameworks that we've been talking about. Um, the idea of growth or trying to grow your business. We also kind of mentioned this with the 3 C's approach. That's something that you could utilize there too. But today we're going to be focusing on acquisitions and sales. So determining whether the client should purchase another business or sell an existing part of their business. That's the whole idea of mergers and acquisitions. It's usually done by a private equity firm or a financial or strategic buyer you could think of, but I'll kind of explain that in a couple seconds. So as we've kind of talked about before, I kind of want to reintroduce, just because we had our break, the way our format of our consulting case interview is we get a prompt. From there, we take a couple minutes to build some clarifying questions or just think about some clarifying questions, ask them to the interviewer. Then we get about 2 minutes to build out a framework. A framework is just a way of thinking or a way of strategizing what questions you want to ask to inevitably get to a solution. Then from there, usually what happens is you get some type of math that you have to do, or some type of analysis that you have to do that the consulting firm wants to see, just to make sure that you have that type of consultant skill set. And then from there, they might have you do some brainstorming. At the end, there's always some type of conclusion or recommendation that has to be pitched. And what we recommend here at FCG's Consulting is always recommending some next steps that the client could be aware of or can take advantage of, or potentially if you can't do any next steps, what you want to do is consider any risk between what decision you're going to make. Uh, did my slide actually not make it into the slideshow? Ooh, that would piss me off. I don't think it did. It's actually kind of funny. Give me 1 second so I could just share this really quick. That's so funny. Uh, from current slide. And you guys can see my screen right now.
Yeah.
Perfect. Okay. So this just from some other slideshow that I meant to pull this up, but mergers and acquisitions. What's the idea here? So I kind of talked about the idea of buying or potentially selling your business. Some key mergers and acquisitions you might have heard of. Well, a big one was when Instagram sold to Facebook. That was a big merger that happened or an acquisition that happened on Facebook side. They acquired Instagram and made them part of the Meta force. uh, an acquisition. So that was a merger. Or actually, you could say that Facebook acquired Instagram. You could also say that they merged kind of there, but another classic example would be when Elon bought Twitter. That was more on the news. People probably heard about that. That was a classic acquisition, and he probably utilized some type of consulting firm when going into that. Who are the main players when it comes to a merger and acquisition, or who are the key players in any type of M&A deal? Well, it's usually the business that's trying to sell themselves. So that's either the company or the shareholders, depending on if it's a public company or just a private company. Um, in terms of the buyer, so that's usually some type of private equity firm or it's usually a strategic. So a strategic is kind of like when Facebook bought Instagram, they were just trying to add them into their portfolio so that they could almost enhance the social media space, right? Usually what a private equity firm is, they're trying to make money on the behalf of their general partners or their LPs. And what they try to do is they invest in a multitude of privately held businesses and they try to generate returns off those privately held businesses. So that's the idea of private equity. What you do there is you are buying businesses because you want to put them into a portfolio of assets, and that portfolio of assets is almost treated like any type of stock assets that you might have or any type of portfolio that you might build yourself. It's basically they're trying to generate returns and they're trying to generate returns in excess to the market. So when I say the market, I mean the S&P 500. A private equity firm is trying to beat the S&P 500 and they're trying to beat it by almost twofold half the time. So a private equity firm is a financial buyer, an individual, an investment group, or an investment company seeking acquisitions that provide favorable profits and cash flows, right? On the opposite side, there's a strategic buyer. So that's when I said about Facebook and Instagram, a company seeking acquisitions that provide more than the profits and cash flows due to the acquisition target and may include the desire to acquire operational economies, additional market share, technology, or other synergies. So when you think about Facebook acquiring Instagram, right? So we had the social media space and we had all the market share of all the social media spaces in there, right? And there was Facebook independently and there was Instagram. Now when Facebook and Instagram come together as part of one in terms of the Meta, Meta now has a bigger play in terms of market share and that they could use to generate more profits. They could use that for more exposure. Um, they could use that as an operational efficiency. So if you think about even the HR system that if you think about the HR system that the Facebook people were using when they acquired Instagram, there was probably some other HR system that Instagram was using, right? So now when you actually acquire this company, now you guys can just create a synergy, and a synergy is just basically a cost-cutting measure between the two companies. So say I use Workday and they use ADP. Well, now we could just use Workday and cut the ADP, right? Because now as one firm, we could come together and utilize both of our operations and both of our efficiencies to make a better company. So that's kind of the idea. Um, and in consulting firms, whether you worked at EY, this is all I was doing this summer. I was an M&A consultant. We were put on financial due diligence cases. And what we were doing there is we were representing either the buy side, so the person that was trying to buy the company, or the sell side, the person that was trying to sell their company, and trying to come up with a appropriate evaluation for them to actually sell at. So that's what we were doing at EY. That's what the consulting I was doing this summer. There's also more strategic consulting, which is kind of the case that we'll be doing today, where you think about how much you should be buying it for, who you should be buying, if you should even be buying. At EY was a little bit more limited in the scope. We just came in to do the financial due diligence, but some consulting firms come in to do the whole strategy behind should we even buy this company. So that's M&A. And let me exit this and then go back to the other slideshow. Oh, come on. I just gotta pull it over here. Slideshow from current slide. Okay, perfect. So talked about the format. So these are some of the frameworks that we've been talking about over the last few weeks, and I just want to go over them because you guys will probably be using them today, especially this market sizing one. This is I don't know why this is profitability on the top, but this is market sizing. I forgot to change that. So if you're trying to do the market size, you're going to look at the price and the units sold. To get to the number of units actually sold, you're going to understand how many consumers there actually were, and you're going to multiply that by the average consumption per consumer. From there, to get to the actual number of total consumers, you have to look at the total population and the penetration rate. If you don't remember what a penetration rate is, it's the idea that how many people actually use this product. So in our case, it was the bubble gum. How many people actually chew bubble gum? I think there's a high penetration rate within bubble gum. There's a lot of people that chew bubble gum. So that's the idea. About 90% of people chew bubble gum. That's a 90% penetration rate. 90% of people would actually chew gum in their life. This is our three C's approach. This was looking at customers, competition, and company to more or less decide if we're going to launch a new product, if we're trying to grow into a new industry. More or less, it's more of like a strategic overall approach in comparison to the market sizing, where you're actually just adding a bunch of assumptions. Here, you're asking a lot more questions to drive answers, or to drive your hypothesis or your answer to the inevitable case. This is the actual profitability. See, I switched up market sizing and profitability. I need to go to sleep. In terms of profitability, we look at revenues and costs. In terms of revenue, revenue is broken up into the units sold and the price per units. In terms of units sold, we're trying to look at how many, if the units have been decreasing over the last few years. And in terms of prices, we're trying to see if we can increase the price. That would potentially increase our revenue. On the cost side, we usually look at fixed and variable costs to see if there's any costs that might be standing out or that might be a little bit too high, to see if we could potentially reduce them somehow. This is what we'll be focusing on today. And this is just an approach. I'm not telling you guys to use it, but it's there for a reason. So mergers and acquisitions. So we just talked about what they were, why they might be important. So when you're thinking about a mergers and acquisition case, there's kind of five buckets that you want to go about. You want to look at the market size. You want to understand how big the market is, if this market is actually growing. Because if you're trying to enter or if you're trying to acquire a company that's working in this space or in this market, you got to understand if it's even attractive, if the market's declining, um, and if it's even a high growing market. Because if you're going to be in a market that's declining, the company's probably not going to do well, and the acquisition's probably not going to go well either. Just think about if we acquired Blockbuster right now. There's no use for it. It'd probably be cheap, but there's really no use for it. It'd probably go bankrupt, right? So it'd probably be a bad acquisition, but it could be dependent on the deal price. So that's another bucket that we have. Another thing that we should focus on is how profitable are we going to be once we actually merge together. So we have the financials of the company that we're trying to acquire. We have the financials of our company. If we merge them together, are we actually going to still be profitable? We might be profitable as our company right now, but if we combine with this new company, are we going to be even profitable? Um, so how profitable would this product be? Is there, and another thing we could think about in profitability is there a possibility of a price premium through this acquisition? So now that we might own more of the market, could we charge more? Now that we've done this acquisition, now we might be viewed more as a premium brand. So can we charge more, right? So these are the questions you want to be asking in terms of profitability, but you could also use a profitability approach to even look at this, right? Synergies. Synergies, like I said earlier, it's when two companies come together and we almost find these cost-cutting measures when these two companies come together. So another one that could be is the rent. If you have two facilities or two companies that are coming together, you might not need the building rents for one other building, right? You might need it because where the hell are you going to put those people? But say you acquire this company and you just turn them all hybrid, right? Everyone else that we just acquired gets moved into a hybrid. Well, now you only need one office, right? So like, what synergies can we make off this acquisition? What cost-cutting measures can we make if we bring these two companies together? In terms of competition, we always want to think of our competition. And if you kind of see this framework, we're utilizing the other frameworks that we've learned to build one bigger framework. We're looking at the market and we're going to try to build a market size or at least understand the market size, right? Profitability, we've talked about that. In terms of competition, that comes from our three C's. And we want to think about, is our company preferred in the market? With that, that actually comes with uh, that comes with some like, how would I say it? Some premiums that you could take advantage of. And if this acquisition comes together, are we going to be looked at as more of a premium brand, right? So we have to look at our competition too. Who are our current competitors? If we acquire this company too, in terms of what barriers of entries there might be, and how large is the threat of new entrants? So the threat of new entrants is new people coming into the market and taking up a certain percentage of the market share. Last thing that I just mentioned is the deal price. So a deal might be good depending on the price you get it at, right? So we might look at all these metrics right here, but if the price is right, the price is right, right? So like I said, if we could buy blockbusters for $1, shit, we could probably sell off all the assets that it has and probably make some type of profitability there. But if we're buying it for $1 billion, that probably doesn't make sense, right? So like we got to look at we got to look at the acquisition and actually consider what are we actually paying for this, and is this an appropriate value to be paying for this? Because the deal might be good in terms of the market is growing, it's a super profitable company, there's great synergies. However, if the price isn't right and you got to pay a premium on that company, and that kind of kills the deal, and that might even make you, a little bit unprofitable. So we always want to consider that, and also how we're going to finance that deal too. Awesome. So now we're going to put it to test. Just walked you guys through, some case that you could use or a framework that you could utilize, but um, this is one case. This is from Bain, round one. Bain is focused solely, Bain is mostly focused on helping private equity firms buy other companies or strategize on buying other companies. And that's another thing with Oliver Wyman too. They have a really big private equity practice. So that company that I showed you at the beginning with the new internships, they're really big in the M&A space. So if you ever have an interview with Oliver Wyman, what you should expect is probably a mergers and acquisition case. And if you're interviewing at Bain, you should probably expect a mergers and acquisition case. The idea is they serve private equity clients, so their cases are probably going to be more towards private equity clients. McKinsey, they do a lot of nonprofit work. A lot of their cases when they're interviewing students is nonprofit cases, right? So like when you're going through the recruiting process, think about the firm and think about the cases that they could potentially deploy to you, right? So first, this is the problem. A U.S. snack food company specializing in snacking peanuts, Peanut Co., is planning to acquire another company specializing in snacking almonds, Almond Co. Peanut Co. is currently the market leader in snacking peanuts, but the overall segment is growing slowly compared to the market, and they want to diversify. They have hired you to tell them whether this is a good idea or not. So I'll just recap it here. So right now we have Peanut Co. That is our strategic, and they are thinking about buying Almond Co., which is our target you could consider here, or a target company that we're trying to buy. And currently, right now, Peanut Co. is actually the leader in the snacking peanuts market, but the segment overall or the market overall is slowly declining, and they're scared that they're inevitably going to lose profitability because, they're not going to be selling as many products as they used to be. They want to potentially acquire Element Co. because they feel that this might be a good idea in terms of diversifying and potentially adding to their product portfolio right now. That's the case. And as we start any case, first questions we should be asking is our clarifying questions. So that's what I will let you guys do here. I'll let you guys come off mute, and if not, I'll just call on someone. But let me get to that. So what are some clarifying questions you guys might have?
Hey Elijah, I
Hey,
have some clarifying questions
go ahead.
for you. Okay, so my first question would be, what is the objective of this acquisition? Do we have specific metrics or targets in mind?
That's a great question. So I think management right now, they're trying to make their money back within 3 years. So we could think about a payback period of 3 years. They're trying to be profitable. As we kind of mentioned with the case right now, they're really trying to clarify if this is going to be a good market to enter. So right now they're in the peanut market, but they want to enter potentially the almond market. And they want to see if there's really, if this is an attractive market, and if they're going to be profitable within the 3 year period.
That's amazing. And my next question to you would be, in addition to peanuts, what kind of other products do we sell?
Yeah, so as of right now, you could think about like packaged peanuts or like snacking almonds, maybe those like the ones you might find at work or in your pantry at home. That's solely what we're focused on right now. However, we're thinking if we could add these almond peanuts or these almond to peanut co right now, maybe we could do some like trail mix or stuff like that. So maybe that's something that we could hear from you guys too.
Great. And the final question I have is, where do we sell our products?
As of right now, you could assume in the
Mhm.
US.
Okay,
Yeah, that's a great question. It's a great question.
perfect. Thank you.
Of course.
Um, I have a clarifying question, I suppose. My question would be like what's the like what life stage is the almonds from the Almond Co. Currently in? Is it trending upwards? Because if we, from what I'm gathering from the problem, Peanuts Co. is somewhat at like a stagnant stage. So my question would be, where is Almond Co. in their market?
That is a great question, and that is really insightful. So you kind of mentioned that the peanut market is slowing down right now, and the question that I kind of had in the back of my head was, is this a trend affecting the entire snack market, right? So not just almonds, not just peanuts, but like any snack, any nut that you could think of. And no, the almond industry is not impacted because almonds are considered to be higher in nutrients. So you could say that the market right now is not as stagnant as the peanut coat market, and potentially um, it's looking like it's not at least not growing. If that answers your question.
It does, thank you.
Yeah, of course. Ava, go ahead.
I just wanted to ask, so do they want to stop selling peanuts like overall, or do they just want to start selling almonds?
Yeah.
Like, is this the goal of the merger to totally switch from the peanut market to the almond market, or?
Oh, it's a great question. And as of right now, I could say ideally we come together and we're a peanut and almond company and we're selling those
Okay.
two things. But I think you're kind of pushing towards a good question, which is, are we only looking at the snacking almond market? Are we potentially looking to acquire other foods in the other snacking field? So like other nut companies, right? Not just almonds, but maybe pecans, right? Maybe you could go acquire Pecan Co.
No, my
And
question was just like, since you said that the peanut market is degrading in a way because almonds are seen as more nutritious, do they want to continue selling their peanuts, or do they just
they
want to like fully?
they do. They do want to continue sending those
Okay.
peanuts. And also just maybe some more additional info. They're solely looking at the almond market right now. So that's just some
Okay,
other
thank you.
clarifying answers that I have. Miguel, go ahead. Then we'll move on here.
Um, I would like to know what's the market share of Almenco to know like what our competitors will be or if they're on top of the market share at the moment.
Yeah, that's a great question. We're actually going to have you calculate that. So I'm going to actually have you calculate. I know right now we have about 10% of the market share, but I don't know how big the market actually is. So that's something I'm going to ask you a little bit later if you don't mind that. But that's a great question. That's a great question. Go ahead, Sudyansh.
Yeah, so I had a question. It's generally about the problems that Almond Co. or in general the whole sector of almond snacks are facing right now. And if so, and what are they and the competition in the market?
Yeah, so Almond Co. As of right now, we don't know too much about the almond market. As of right now, we know a lot about the peanut market and that it's been stagnant over the last few years. People just don't want as many peanuts. They feel that almonds are a lot healthier of an option, so they've been moving to almonds, and we've seen that affect our sales. Um, I guess if that answers a little bit of your question there.
All right, and I have another question. about the deal price, do we have to analyze that, or do we already have it?
Yeah, so that's something that we could talk about a little bit later. I'll give you the information on that a little bit later on, but that's a good question. It's a great question. And we do
I
have that info.
I
Go
have
ahead.
one last question. Do you think I could ask something?
Go ahead, Jacob.
Yeah, perfect. I'm a little bit new to FCG, but
You're good, brother.
based off of what I've seen, I'm probably just yeah, so. My question would be, what existing liabilities or like, I guess, risks would they have
Yeah, so
thus far?
yeah, as of right now, that's something that we might have you do a little bit later on. So, as of right now, we could say that our biggest risk is the profitability risk that we might be facing in the next few years, especially with the market growing or declining, the peanut market declining. So what we're trying to do through this acquisition is just potentially find a new market that we could enter, um, and potentially combine both of those companies together to be a more profitable company.
Perfect. Awesome.
Yep. And maybe leverage our manufacturing right now and stuff like that too. So, okay, perfect. So before I have you guys look at uh the next part, I need you guys to build out a framework. So I'm going to give you guys about 2 minutes here. It's 33. I'll give you guys about till 36, 35, to build out a framework on what you want to analyze and what you want to look into in terms of seeing if this is a good acquisition or not. So, and I'll do this with you guys too.
Hey Elijah, I just want to ask something. When it says they got the segment is growing slowly compared to the market, what do you mean the segment?
You could say the snacking food market is what they're talking about.
Oh, so the
The peanut
peanuts.
markets is the segment within that.
Got it.
Yeah.
Thank-
Okay, that's about it's 6:53 or 6:56 right now. 6:36 right now. Like I said, I would do this with you guys. Um, It's a little messier. Don't worry about me. Um, I will introduce my framework. I'll kind of show you guys my framework here. But before I do, I just want to hear one framework first. So, I'm gonna call on. I want to hear Miguel. Actually, I want to hear Johnny. Johnny, let me hear what you cooked up here, brother.
Well, I'm still kind of working on it,
Yeah.
but for this approach, I used the market sizing framework. So I start off with total population. To make it a little bit easier, I gave 600 just because my penetration rate, I did put it at 20% since this market was declining, as mentioned.
Yeah.
So when you multiply that, you get 120 million consumers. And then for the average yearly consumption per consumer, I put around like 20 million. I didn't want to put a high number just because we are trying to like kind of grow, I guess, but at the same time it was a slow market as mentioned. So from there, 120 divided by 20 will give us 6 million
Yep.
units sold, and then for the price, I assume that it would be like around like $3 to make it a little bit easier for us. So 6 million divided by 3 will give us 2 million per year for market
Okay.
size.
And do you feel that's low? And I'm just looking at the almond market overall in the United States, $18 million. Do you think that's a low number?
Uh, yeah, I do believe that's a low number for.
And and what do you
Uh,
think could have went wrong there? Like, what assumption do you think could have maybe thrown off that number a little bit?
I just believe that just like not much people would think about like peanuts as a snack. Just I feel like there's a lot more different snacks varieties nowadays. So peanuts is one of those of like old fashioned, I guess you could say. Like not much modern people would like prefer a peanut over like maybe like an M&M or something like that.
Yeah. No, that's fair. That's a fair point. I would say that you attached one part of the potential framework. So like if I asked you if I want to buy this company and then you came up to me and told me, let's look at the market. It's a good bucket. However, I think you do need some more. And I think that's perfectly fine. And I like how you build out the market sizing. We will be doing that. And one thing I also want to say is when you're in a market sizing case, it's going to be obvious that you're in a market sizing case. They're going to tell you size this market. And then from there, you go directly to that market sizing approach. But before you even get to approaching or even getting to a market size, before I even ask you, what is the market size, right? Because that's what you just answered right now. You need to answer why we even want to look into this market. So is how big is this market? That's the first question we ask. And if we want to answer that question, then we do a market size. Is this market growing? That's something that the consultant could potentially give us, right? If it's a growing market, he'll tell us it's growing, and then he'll tell us it's growing by like 5%, and then we could throw that into our calculations. So you did a good job of actually applying the market framework. And then when I ask you what the market size is, because that's exactly what I'm going to ask you next, you already have your framework built out, but you kind of jumped a little bit before, which is perfectly fine. We're still learning, but I think it was a good attempt, and I think you did a good job at least rationaling some of your assumptions, even if the number was completely off. Thank you. Go ahead, Ava.
Could I share my framework?
Yeah, 100%. Go ahead.
So first I would start by looking at the market size, so of the almond market specifically.
Yep.
So who's the leader, especially if there's any incoming players, meaning that I would, how I would think about it is, for example, I think one of the most prominent areas, like maybe on airlines, like the snacks that they sell
Yeah.
or that they give out, because a lot of people have like peanut allergies, maybe they're switching to almonds. So maybe that has something to do with it. And then I would look at the actual company itself that we want to merge with. So what's the company's profitability? Maybe some key ratios to look over, and then compare those financials with the other key players in the market.
Yeah.
And just see if they're attractive. Because obviously we don't want to merge with a company that has a lot of debt, for example.
Yeah.
And then look at the synergies, mainly the cost synergies, just to see can we utilize this company in any way to make our processes more cost efficient. So
Yep.
do they have a really good distribution channel, or do they have a really good marketing strategy that we can
Yep.
use? Do they have um, a really good manufacturing line
Yep.
and where they sold, and can we utilize that obviously to bring our costs down?
Yep.
And then finally, I would just obviously we need to have some numbers to go about, but at the end, I would just ask myself if this is actually a price that is reasonable,
Yeah.
or what is the what would be a somewhat expected sort of return we would get, and does that meet our end goal?
Yeah, I think that's a really good framework, Gavin. That was a really good job.
Mm.
So first you started off with the market size. You want to understand who is the actual leader, and then potentially looking at potential ways that we could maybe expand or seeing if there's any barriers to entry. So how hard it is to actually enter this market, and start in this market. From there, on the company side or on the target side, the company that we're trying to actually acquire, you wanted to look at some financial metrics, specifically their profitability, to see if they merge, if we're actually going to still be a profitable company, or if any of their financials scare us. Synergies, I think you did a really good job. I think I was a little scared when you just said cost, but then you mentioned which cost. So distribution, marketing, and then you also mentioned where they might be potentially sold and as a cost cutting measure there. So if they're in Chile right now and Chile has no tariffs to the United States, that might be better than Mexico, who has some tariffs in the United States, for the automotive industry, right? So like where we're at is pretty important too. And then lastly, you considered the deal price. How much should we actually be paying for this? Is this going to be appropriate? I liked it. It was a really good framework, really clean. That was a good approach. And very similar to what you'll see on the next slide. So thank you for that. SK, go ahead, brother.
I just had a question. So, how
Yeah.
do I think about this? Like, the way I thought was how it can be a good idea to like merge or whatever, like, I, like take over this company. Is that how we have to think for this?
Yeah. Well, you're asking yourself the right question. Is this an appropriate company to merge with, right? Is this a company that we should merge with? And what should you consider when you're merging with a company, right? It can't just be the
Okay.
financials all the time, right? There's
Yeah.
got to be
So,
some type of, go ahead,
yeah. So there are some things like tell me if I'm wrong. I don't know
go ahead.
if I yeah I did not think much about the financials, but I thought that merging or whatever it's doing, I don't know,
Yeah.
M&A,
Yeah.
with Almond would be a great way to kind of leverage the trend of the population going for healthier snacks, and it would be a good way for diversification because it is somewhat similar, so there wouldn't be a lot of cost required because it is something that they're already like they've already accustomed to,
Yeah.
and it can be a good counter to slow growth rate because of the same reason. And another thing is the customer base, because the target audience is mostly the same. They're into snacks, so if they merge with some like with Almond and Co, um, like it's the same customer. Like it would be easy to they won't have to target a different audience.
Yeah.
Well, kind of. So
Oh,
and lastly, I was thinking about the staff is that they have experience with working with Peanut and Co. And if they like if they decide to merge with Almond and Co, it wouldn't be a huge shift because they're already experienced with it. So it wouldn't be a lot of cost to the company.
yeah. That's your own framework right there. You just built out your own framework. And what you did is you looked at leveraging potential trends, in terms of the healthier people, like moving from peanuts to almonds. If we could take advantage of this and potentially hop on the trend, this could be a bucket that we're analyzing. So what you could ask is questions around the trends. Are there more people that are moving into healthier snacks, right? And now you're building almost a market there, right? So whether you notice it or not, you're asking realistically questions about the market, when you're leveraging trends. In terms of diversification, well, now that we're with an almond company, potentially you could sell trail mix or almonds and peanuts in one bag, right? And that could be a cost cutting measure. And in terms of diversifying and getting our name out there, I think that more relates to, I wouldn't say market. I wouldn't even say market size. I would think that's more like the company itself. You kind of mentioned the customer base, which is a good idea. In terms of, are customers even going to like this? I think that's a good consideration. What I think you could do is put it into broader buckets, because for each bucket that you had, you probably had about one question. But if you put those buckets into a market sizing question, right? Or sorry, if you put those questions into your market bucket and you ask maybe a couple questions that are pretty standard with the market bucket, like here, let me just move my screen to the next one. So like if you start with the market bucket, how large is the actual bucket or how large is the actual market? Okay, well, I want to understand, are people actually moving from peanuts to almonds because it is healthier? And could we leverage that trend right now? And if we can, what numbers could we get behind that so that, we could build out some assumptions from there. So I think what you're doing is you built out your own framework. I think it's a solid approach. But what I think what you could do is use a more generic structure and then from there, add those unique caveats into there. So, I think what you did is fine, to be honest with you, Josh.
All right,
All right,
thanks.
brother. Yeah, of course. So this is the framework that, they kind of talked about within the casebook. So with the market, you want to understand how large the market is for snacking almonds. You also want to understand if this industry is expected to grow. Is it going to be stagnant? If it's going up or down? We already answered that, so it's going to be growing. We expect it to grow. How profitable in terms of profitability? That's my second bucket. I want to understand how profitable will this product actually be. And that was something that Ava mentioned, so that was awesome. Is snacking almonds a more premium market than snacking peanuts in terms of price? So can we charge more for almonds than we could actually charge for peanuts right now, right? In terms of synergies, this is something that Ava also mentioned too. So can we leverage existing capabilities, distribution, marketing, sales? If we could leverage these, we're cutting some costs here. But we also have to think about if we're solely a peanut provider right now, and now we introduce almonds, our customers are probably going to buy some almonds, right? And we probably want that, but that's going to cannibalize the sales of the people that are already buying peanuts, right? So we got to think about cannibalization too, within the synergies. Uh, Last thing I asked here was, is the overlap between almonds and peanut customers high? So do peanut customers buy almonds and do almond customers buy peanuts? If they don't, it might not be a good synergy or it might not be a good acquisition because we're thinking like, are our customers even thinking about this product? But if they're thinking about buying peanuts and they're choosing between peanuts and almonds, now we have at least two choices within the market, which is better for us. In terms of competition, are we preferred in the market? Who are our current competitors? Are there any barriers to entry? Is it hard for a company to come in and actually compete? And then how large is the threat of new entrants? So can people just easily come in with, some easy startup costs? Lastly, we want to consider the deal price. What is the actual deal that we're going to be paying for? And then how are we actually going to finance that deal? How are we actually going to pay for it? Are we going to go into debt? Are we going to go raise capital? How are we going to pay for this? Awesome. So you guys told me that you want to look into the market, or Ava told me she wants to look into the market. So what I want you to do is, I don't really know what the market is for almond or for snacking almonds in the United States. But what I want you to do is figure that out for me. So I gave you some assumptions here. You could assume that the US population is 300 million. This next kind of line is kind of to throw you guys off. So one snack of almonds is about 16 ounces. That's more or less just to throw you off when you're creating your calculations here, try to think about how many packets are actually being sold, or try to calculate how many packets are being sold, the number of packets, and then the price is $2 per packet. So I'm gonna give you guys a couple minutes to build out a framework. Remember to go through the steps, and at the end, check if it's realistic, right? So we did that with Johnny here. What assumptions could have potentially thrown off that number at the end? He had 18 million for the market size in the United States. I could tell you that there's probably an almond company that sells more than $18 million in almonds in itself. So I could tell you the market itself is a lot bigger if one company can do it, right? But the framework and the approach might have been right. It just might have been the assumptions. So um, think about it. I gave you some numbers that you could throw into there, and then I'll show you guys a different way to market size here. I'll give you guys about 2 minutes here, or maybe a minute.
Wait, is one packet 16 ounces?
One packet is 16 ounces. That's really to throw you off. I don't
And
think it's
that's
really
just the assumed serving size?
correct. Correct. Yeah, so just think about like what we sell is one of those like tiny packets of almonds and there's 16 ounces in that.
Yeah, got it.
Okay. Would a company ever expect an approach to sustainability? Yeah, I think that's a fair approach. I think you could add that in your recommendation. I don't think it's, our sole focus in this scope right now. But I think it's something that you could add at the end. Let me go on mute here. All right, I'm gonna go and ask somebody to do the market size here. And I'm gonna start with Johnny since I've already tested him a little bit and I want to see if he was able to change any of those assumptions there. And if not, perfectly fine, but I'll show you maybe a different way of doing it after. Let me turn on my camera again. Sorry for calling you out twice, Johnny. This wasn't in the
Uh,
contract.
Still kind of working on it. Since I know that the total population now is 300 million, I did kind of up my penetration rate a little bit since I did give it a little bit low earlier.
Okay.
But I'm still kind of still assuming, I guess, a good number for average yearly consumption per consumer.
Yep.
But currently, right now, the number of consumers will be 300 million times 40%, which is still around 120 million.
Yeah.
But then I believe that I believe the number I gave for yearly consumption was a little bit low. So assuming that now that we know that the population is 300 million, I believe that we should probably up the yearly consumption to around, let's say, 60 million.
Yeah. And then you times that by the price,
Mhm.
you get about 120 in terms of market size for the almond market.
Yeah,
And your penetration rate was what?
I believe it was 20% earlier, now up
And
to 40.
and I'm gonna push you on this, that 20%. Do you think 20% of the market? Actually, I think that's actually a fair assumption. Like 25% of or 75% of the market doesn't snack on peanuts. That's a pretty solid assumption. I'd give you that. What is your number of consumers, or how much yearly consumption? How many?
I put it at 60 million now.
Uh, the number of consumers.
120 million.
Okay, and then so you're doing 120 times 60 is what you're doing there on your framework. Because you started
Uh,
at population, then a penetration rate. You did that by 40, so that should give you 120 million, right? So 300
mhm.
million times 40, that's 120 million. Then you had a penetration rate, consumption or a yearly consumption of what? 60 million, you said?
Yeah.
So I mean, that's high. I would say like, there's no way I could eat
Yeah, I think
60.
I messed up there. Yeah.
Yeah, you're good. You're good. That's perfectly fine. I'll show you right now, kind of the framework that
Hmm.
I'm thinking about. So similar. Similar. And this is kind of different than what I taught you guys initially, but it's kind of using the same fundamentals. The way I broke it up here is I thought about it in categories. So there's probably about 75% of the population. I know that the population is 300 million. So what I'm going to start doing is just assigning percentages to that. So 75% of the population probably doesn't snack on nuts. Just like Johnny said, about 25% of the population does, right? So I'm going to do casual consumers because there's probably people that eat nuts maybe twice a month or once a month or maybe 3 times a month. So what I'm going to do is say about 10% of the population eats nuts about twice a month, right? I'm also going to say there's more health conscious consumers. So there's people that care more about eating almonds that are a little bit more healthier. I'm going to say that's about 10% of the population too. So right now we're at 10% or we're at 75% doesn't eat nuts, and another 20% is in between a casual consumer and a health conscious consumer, right? Lastly, we have about 5%. Those are frequent consumers. Those are people that are eating a bunch of almonds per day. They're probably eating about 10 per month, or maybe they're eating about, a pack every 3 days. So that's probably a more frequent almond consumer, right? So I started with those percentages and I told you that the US population is 300 million, right? So what I did is I grabbed those percentages of the US population and I times that by that 300 million. That gave me a population size. So I know that about 210 million people do not eat nuts, right? Based on this calculation and based on my assumption. About 30 million are casual consumers because that's 10% of the 300 million in terms of population. Health conscious, 30 million again. And then our frequent consumers, we have about 15 million people who are frequent consumers. From there, I times it by the yearly consumption rate, or here what I called it is the number of snack almonds, consumed per year. I started at a monthly basis and just times it by 12, to get to the yearly number. So 25, or if you're a casual consumer, I just assume that you eat about 2 almond packets per month. If you times that by 12, it's about 24 or 25. Thank you, Lumia, or Mila. Um, then from there, what you have is the population size. You times that by the number of almonds consumed, or the number of almond packets, and now you have a total consumption. Total consumption at the bottom here for casual consumers was 750 million, in terms of the number of almond packets that they eat per year in the US. And then you start adding all those rows up, or all those columns up. Here, what you get after you do that, so you get the number of packets that were actually sold, 0.75 billion, or 750 million is another way of thinking about that, plus 1.8 billion, or 1,800 million. You add those all up together, or this bottom row together, that gets you to about 4.5 billion in terms of how many packets were actually sold in the US last year.
Hey, Elijah,
Correct. Go ahead, brother.
what is that, when you got the number of snack almond packets consumed per year, what does that like 25, 60, and 12 mean?
Yeah, so think about that as almost like an average yearly consumption rate. Think about the 2 per month. When I say 2 per month, I mean we eat 2 packets per month. And if you put that on a yearly basis, 2 times 12 is 24. I'll just round it up to 25. So number of snack almonds consumed per year. If you look at the left side, it says per year, but I started at a per month basis just because it's easier to think that way.
Thank you.
Yeah. So we have a number of total units consumed around 5 billion, right? And our cost of each packet was, or the price, actually, I should say, of each packet is about $2. So we just grab that 5 billion for the number of units sold times the number of packets, or the price per packet, and that gets us our total market size. 10 billion. 10 billion is the total market size for almonds. And we're going to move on in the case with that, right? And now we're going to do a break-even analysis. So just remember that number, $10 billion is our market size for almonds. Doesn't matter if you got it right or wrong. 10 billion is our market size. Awesome. Now, what I want you guys to do is to do a break-even analysis. So now that you know what the total market size is, I'm going to tell you what Almond Co.'s market share is. So we know it's about $10 billion. Their market share, or how much they actually own in that market, is about 10%. So you could assume their sales are about $1 billion if the market size is $10 billion. Am I losing anyone here? Not yet. Perfect. Okay. Here, what we're going to do is we have some profit margin. So me as the consultant, I'm going to give you the profit margin of 50%. We have our revenue, which was 1 billion, which is 10% of our market size, our total market size, which we just calculated. We got our revenue by doing 10% of that, so 1 billion. And now we need to figure out our actual profit. So our profit margin is given to us. Go ahead, Liz.
Sorry, can you go back to the page where you had the frameworks?
Of which frameworks? This one right here, or do you want me to go to the beginning?
Oh my God, Siri, shut up. Okay. No, like the summary of all the frameworks that
Of
you
course, yep. Yeah, so I'll go to market sizing first. This is market sizing. Sorry, I put profitability, but this is market sizing.
Okay, I think you could go back a little bit.
Yep, of course. Go back in terms of like this way.
The ones we explored today, not the past ones.
One more time.
The frameworks that you gave us, I think you had the market size, profitability. There you go.
Yes, these are all of them. Yeah,
Okay, and these are the questions that you ask
correct.
first, right?
Usually what you would do is usually what a framework is what questions do you want answered so that you
Mm,
could prove your hypothesis. The whole idea of a case is you're given the case, they give you a question, right? And today was, okay, should we acquire this company? And you go in with some type of hypothesis. Yeah, we should acquire this company, but you need to prove that hypothesis. And how are we going to prove
mm,
that? We build out a framework with questions in mind, and those questions almost become like a check, right? Okay, is this market,
mhm.
how big is this market? Okay, we need to figure that out. We'll calculate that ourselves. Okay, but is this market even growing? Okay, it's growing now that we understand it. That makes it a little bit more attractive. So that's a check. Um, for the next one, now let's go analyze our profitability. If the company's not profitable, maybe that's a red flag. So maybe we could check that. But if they are profitable, okay, now we have a check. Now we have a reason to tell our client why the hell they should even acquire this company. And this is all going to come to the end where you come up with a recommendation. So hopefully that
Okay.
clarifies that a little bit.
Yeah.
Okay.
Thank you.
Yeah. Yeah, of course. Thank you for that question. That's a good question. Oh, damn, I'm not giving answers. Okay, so I was just at the market size. So we have our market size, that's 10 billion. Almond Co owns about 10% of that. That's 1 billion. So that's $1 billion in revenue. Our profit margin is about 50%. So that's about $500 billion that we actually make per year in terms of profit. $500 billion. What I'm going to tell you is we're going to purchase the company for $1.5 billion. Their cash flow per year is $500 million or $500 million dollars, sorry. What I want to know is actually the payback period. So how long would this actually pay back? Um, or how long would this actually take for us to pay back? So I just want an answer on that. How long would it take for us to break even?
3 years.
Perfect. Perfect. And can you walk me through that math? Even though I kind of did it, but just walk me through that math, how you were thinking.
Okay, so we got like $1 billion per year from market share, and we have a profit margin of 50%. That means we are getting a profit of $500 million per year. So I would take the purchase price for Pinaco, which is 1.5 billion, and I would divide it by the cash flow per year of 500 million.
Okay. Perfect. Perfect. Thank you. That's perfect. So now we know our market size. As the candidate, I gave you how big the actual market is in terms of our company itself. So Almacore, we have 10% of the market. He was able to get the total revenues, which was 1 billion. He took 50% of the profit margin because that tells us how much we're going to have in profit and got to profits of $500 million. He grabbed the purchase price that we're going to actually be paying and then divided that by how much our cash flow is each year, which was 500 million or the profits. And that gave us a payback period of 3 years. And if you remember in the beginning of the case, I told you our management team wants to pay off this deal within the first 3 years. So this looks like it's fitting within our management structure. But I guess I would ask you, if the purchase price was doubled and Almond's market share was actually halved, what would be the new payback period? So I'll ask it again. If the purchase price, so say our purchase price went to $3 billion and your market share was actually halved. So instead of having 10%, we only have 5% of that actual $10 billion market share that we originally had. What would be our payback period then? I'll drop this in the chat to make it easier for you guys. Just in case I'm a terrible speaker. I'll give you guys about a minute here to answer. Not that. I gotta type this out. If the purchase price was doubled and Almond Co.'s market
Would it be
share
12 years?
was halved, yeah, that's perfect actually. What would be the new payback period? Yeah, I mean, you made me type all that for nothing, Matthew, but thank you. So that was the question that I originally asked. Matthew, could you potentially walk me through the math that you just did, to get that answer?
Of course. So purchase price is now $3 billion, but we are now making $500 million a year in revenue.
And that's off of what? How'd you get that revenue number?
Um, you gave us a market share of 5% off of a
Yep.
market that makes $10 billion.
Okay, perfect.
So taking that, our revenue would be $500 million a year, and our profit would be 250 million. So I essentially did the same steps where I did 3 billion divided by the cash flow of 250 million.
Yep, perfect. I think that's a really good approach, and I appreciate you answering there. So if the purchase price was doubled and Almond Cove's market share was halved, what would be the new payback period? So let's just think about this step by step. If the purchase price was doubled, as Matthew said, our purchase price right now is 1.5 billion. That's going to go to 3 billion, right? And then our market share was halved. So if you look at the assumptions on top, we had a 10% market share. That's going to now drop to 5%. What's 5% of the total market that we had, which was $10 billion? 500 million, right? So now what we have to do is apply that same profit margin, that 50%, 500 million times 50% is 250 million. And to do 250 million divided by 3 billion, what you would do is you would have to divide that and you would get 12. So 12 years to actually pay that back. That would put us out of scope in terms of the management team and what they actually wanted. So that's kind of why I asked that question. So yeah, fair. Thank you for that. My last question, or I guess I have two more questions is, given Peanuts Co.'s existing snack business, what else would you consider in terms of benefits and risk? This is more or less like a brainstorming question that I mentioned at the beginning. I want you to think of some potential benefits and risks for uh, Peanut Co.'s existing snack business. What else could we potentially do if we acquire this company?
I could go.
Yeah, go ahead.
Yeah, so this is where I'll consider trends, like someone mentioned earlier. So I'll consider what the lifestyle of the people that do snack on peanuts and almonds want or do, and consider packaging as well in a way that you bring the two snacks. I know there are mixed nuts out there,
Yeah,
so consider expanding in that way. So yeah.
yeah. You almost did it right there. So, my main benefits from this, and what I'm thinking of this acquisition is we could cross-sell almonds to other existing peanut customers. So the way I'm thinking about this is we either combine them into like one big pack. I don't know if you guys ever seen like those 24 packs at like Sam's Club and stuff like that, where 12 of them are this and 12 of them might be another. That could be a potential way of cross-selling. What we could also do is we could leverage our current distribution network to expand the reach of Almond Co. and drive our sales. So right now we have a whole setup for people who we have a whole setup in terms of manufacturing for peanuts. However, if we come in and now have almonds, what can we use in terms of our distribution network to actually sell more products? We already have salesmen, we already have people out there that are distributing to like Walmart or Target or whatever you could think of, like these big brand stores. Um, but how could we leverage our distribution network, the ones that we know, to drive more sales for this company? And then you kind of just said it right there at the end, Liz. So extending innovation from peanuts to almonds. So maybe we could look at flavors, packaging, just redesigning overall, ways to get innovative. So you guys talked about the benefits, but what are some potential risks in terms of this acquisition?
Could I share?
One more time, repeat that.
Can I say?
Yeah, go ahead. Yeah.
I feel like with a lot of mergers, something that gets overlooked is if the two companies' sort of core values and sort of way of business coincides with one another.
Yeah.
Because I just feel like if they're not going to be able to cross between sort of the image that they've already created for each other, then it just won't work in any market really, because users really don't like seeing something that they're used to one thing that the company is saying or they're putting out, and then they drastically change it once they merge with another. It just creates a lot of uncertainty, and I think that's something that definitely could be a potential downside, even though our break-even point was quite good.
Yeah.
Yeah, consumer behavior is definitely to be, I think, is the
Consider.
main, yeah,
Yeah, no, I think
consideration.
that's a good point. And what I called it a little bit later on was brand dilution. So if we merge these two companies together, are people going to look at us a little bit different in terms of the
Yeah.
consumers? So I think that's a really good point. And I'll let Alaya share one more before I kind of reveal the answers.
Okay, this might be a kind of a I don't think it's a reach, but
Yeah,
while we could get excited about like, oh, we could merge like factoring, manufacturing, packaging. A lot more people in America, at least I know, are allergic to peanuts than to almonds. So it's not like we could like if we were to try to hold the integrity of, selling almonds, like all the little labels on the back that are
yeah,
like, oh, these are processed in like a peanut-free manufacturer. Well, that means, you know, we have to stay true to that. So it's not like we could potentially combine like the manufacturing or like, yeah, the manufacturing process for the
yeah.
two.
No, that is actually a really good point. That's something I didn't even think about. So that's something that you could bring up as a potential risk, and that's something that could, really distribute the acquisition or even the successfulness of the acquisition, right? So like if we're thinking right now we could put the same peanuts and almonds on the same stands or on the same manufacturing line, we might have that a little bit messed up. We might have to build, new product lines or at least different facilities um so that we could sell to consumers. So that's a really good point actually, Laura. Okay, so the way that I thought about it was cannibalization. So are our sales going to drop? That could be a potential risk. And then the potential of brand dilution. So our peanut company, our sales are potentially going to drop if we add this almond company into it. But as a brand overall, hopefully our profits and our revenues are generating more. Um, so that's that. In terms of recommendations, I'm going to ask you guys. I just want somebody to recap what we did, some of the analysis that we did, and then recommend if it's a good purchase or not a good purchase. Um, but yeah,
Wait, can I ask something?
go
I
ahead,
don't know
brother.
if anyone brought this in, but would a potential benefit be an expanded product line like peanuts and almonds?
Yeah. No,
Or we can move into trail mix?
yeah, that's another. That's kind of one thing that I was thinking about. Like we can make, some type of mix now and benefit off that. So I think that is a really good point. Um, and I think that could be a really good benefit to the company too. So yeah. Anybody want to do the recommendation here? Give it to Miguel if anything. Or Ja or go come. Yeah, you got it.
You think I could also attempt it? I have like a general
Go ahead,
understanding.
Jacob.
So,
Yeah, go
uh,
ahead.
does that work, or do you want to wait for somebody else like me?
One more time. Sorry.
Oh, does now work?
Yeah, go ahead. Yeah.
Definitely. So, I mean, based off of like what we said and stuff, because the acquisition price would be $1.5 billion, I would say that in 3 years we would start generating revenue. I would say that the acquisition would actually be good in order to generate profits for the company through this acquisition.
Awesome. And is there any next steps or any risks that we should consider in terms of this acquisition?
From my understanding, I would say that the risk would be if it was cut down from 10% to 5%, just because it would take an extra 12 years to actually start maximizing profit rather than
Okay.
three,
Yeah.
which is
So maybe if
obviously
that,
a huge.
yeah. So maybe if we can't get that deal price at the price that we wanted, or potentially if our revenues are not what we expect them to be, that could be potentially something that's dangerous in terms of our payback period. I think that's a really good recommendation. What I would try to do if you're ever in a case interview is first talk about the case that you had at hand. So today we had Peanut Co. come to us. They were considering if they should actually acquire Almond Co. Mostly because the peanut company had a decline in the market, and they're trying to see if Almond Co. is a potential good acquisition, right? From there, what we did is we analyzed the market to see if this was a big enough market and if it was growing. We analyzed it. We said, yeah, it was a good market. Then we also looked at things like our profitability. We considered things like our profitability, synergies. We also considered let me see the competition when it came to our framework too. And at the end, what I think is this is a good acquisition in terms of the financials. Our payback period is 3 years, which is something that management wanted. And in terms of risk for this acquisition, you could think if the deal price changes at all, or if the profit margin on our company changes at all, or even our market share, this could really affect the payback period and really drastically change the results of what management wants. So yeah, that's that's the case. But I think you did a good job, brother.
Oh, thank you. Wait, so in the future, it's always good to walk people through, in this case, the clients, what
The
would
whole
happen.
thing. Yeah, the whole thing. Like you want to walk them from the start all the way to the end. It's more or less so that you could recap, and it's more or less just a gesture to the client or the interviewer, right? This is what we did. This is the analysis I did, and this is why I think you should do this.
Awesome. Thank you so much.
Of course, brother. Okay. So whether you want to recommend acquiring it or not, it doesn't really matter with these cases. There's never a right answer. There's never a wrong answer here. So acquire or not, either can be justified. You just need a strong justification on why. So what I would try to do is outline key risks with this recommendation, and then from there outline any key next steps that you can do. So if you were recommending to acquire it, some things that you might say is it's a large and growing market. There was a quick payback period according to our analysis, 3 years. There's a high overlap with customers too. So a lot of people who are purchasing peanuts are actually purchasing almonds also. So we think that we could leverage that in order to get more sales off our customers. But I think some of the risks that we should think about are potentially the cannibalization of sales. And if we enter right now we're traditionally a company, but now we're entering the almond market. Like, is that going to confuse our consumers who are maybe just, the peanut lovers that we've been having? Or is it something that, is manageable and people won't really care about? What I would try to do in terms of next steps is maybe potentially try to lower that deal price. So if you could lower that deal price, we have a faster payback period, right? Um, and you could also determine what exact initiatives can be carried out from the peanut business. In terms of not acquiring the business, um, you could think about things like cannibalizing current sales. That could be something that could push you towards not recommending. You could also say that it's going to impact our current margins or our current margin structure, how we make our margins, right? So we're going to have something that's going to be more premium price like almonds and something that's going to be lower price like peanuts. So they're going to affect our margins now. Over the last few years, we've been pretty steady with peanuts, but how is the addition of almonds going to throw off our margins here? And it could also dilute the brand. So that was something I was talking about a little bit earlier with the recommendation of acquiring it. It could be a bad rep to our customers in terms of going through with this acquisition. Risk, if competitors acquire Almond Co. and succeed, Peanut Co.'s competitive position would be actually weaker. So if we don't go through with this acquisition, um, we might be in a bit worse place than when we didn't go through with this acquisition. Um, what I would try to do in this scenario is try to determine if there's any other players in the space or any type of almond companies that you could potentially acquire there too. So as you can see there, it doesn't really matter if you're recommending for it, against it. You just gotta have some type of reasoning behind it, some type of logic behind it. So hopefully you guys were able to see that. Okay, so that's basically it for me. Next week we were supposed to have something with slalom, but they had to cancel. At least Victor had to cancel, and he was the one that's going to lead it. So we're going to do it the week after. So now I have to create a presentation for next week. So I'm going to pick a topic. It'd probably be somewhere around the growth aspect, or maybe just some concluding case here. What I do want to say is our case competition is starting pretty soon. So like I said, if you didn't email me back so that you're included in that case competition. I want you guys all there. I want you guys all participating. It's going to be a fun case. Probably not going to be utilizing any of the frameworks that I've taught you, but what you're going to be utilizing is your freaking head. So come ready to go. You guys will get about a week or two right now. I'm trying to decide if I should release the case Friday or if I should release it next Friday. But I will let you guys know before the end of the week, and everyone that replies to me, they'll get an email back with the case and stuff like that. We're also doing a social next week. That's going to be on Friday, April 11th. We're going to a Sox game. It's going to start at 6:40. That's going to be Friday, April 11th. There's fireworks after the game at the Sox Stadium. So if you guys want to be there, please come. What we're going to ask on our side is I'm going to buy the tickets. I'm going to buy about 15 to 20 tickets. I think I'm going to buy closer to 15. They're about like $4 per ticket right now, and then you add fees, so they come out to about $10. I'm just gonna ask you guys for $5, and then FCG will cover the other side. So we'll probably spend $75 as a club, and then $75 as on your guys's, and then we'll go out to the game. We'll take a train together. We'll probably hop on the red line because I think that's the only way you could get down there, but we'll be safe together. Don't worry. But that's something that we're trying to plan out for the next 2 weeks. So keep out on the lookout. If you're not part of our group meet, that's where I'll be sending it, and it will be a first come, first serve basis. If you want to invite your boyfriend, girlfriend, significant other, if you want to invite your mother, if you want to invite anybody, feel free. But it's a first come, first serve basis. Just let me know how many tickets you need. Um, anything else on my side? I don't think I need, but if you're not part of our group me, make sure to join that. So that when I do actually send out the tickets, you guys could be the first ones to answer. But that's gonna be Friday, April 11th, 6:40. So yeah, appreciate it, you guys, and I hope you guys have a good rest of your day. That's it on my side, guys. Thank you.
Thank you.